good evening, traders from across the globe, and welcome to the 871st edition of Short-Term Trading Live with Oscar Carboni. Traders, my name is Oscar, and I have been living these markets since 1982, and boy, oh boy, there's been a lot of changes since the beginning when I started, but one thing that has remained consistent is overall throughout the year, if you use technical analysis to call your moves, you will find yourself on the right side of the market more often than not. We all know that futures trading can be extremely risky and can cause substantial financial loss. It's certainly not suitable for all trading accounts, but for you cowboys out there that understand that a stop is your best friend and get the risks behind trading, rock and roll, and let's get going right away, baby. Let's just get into this. It is Monday night. This video is being filmed for Trading Tuesday, May 22nd, 2012, and there's a lot on my board that I want to cover. First thing is, there is a green OMNI, the first one that I have seen in days and days and days, and boy do I welcome that green OMNI. I would not fall in love with it, but let's talk about the whole thing here. Traders, let's start at the top. Let's not forget the overall larger picture is that we are in a bull market. It is experiencing a pullback. That pullback is an intermediate term view, and it is the seasonal, remember the seasonal tendency to drop between May and August each year. I've shown you many charts that show you exactly that. The beginning of May has a tendency to have a seasonal pullback that takes you down through September or August. So it's May through August. Almost every year we have a pullback. That would be your intermediate term view. We have a long-term view again. We are in a bull market, experiencing a pullback, and do expect 1540 to be hit at some time towards the end of this year. That's long-term view. Intermediate term view, remember the tendency, the seasonal tendency for the ES to pull back between May and August. Short-term view, what are we looking at? That's for trading tomorrow in the next couple of days. Holiday reversals abound, traders. Look what happened right out of the chute Monday. Boom, a market that's been going down for days and days on end decides to just turn around and head right back up. First day of the pre-holiday week. Traders, it seems that the reversals have started early, but nonetheless, those reversals are intact. Holiday reversals abound. Now, I know that's an Oscarism, but I know there are thousands and thousands of you Omniacs out there that have seen me put out these holiday reversal videos, and you have seen the result. Many times, if you are in a market that's been going up, for some reason out of nowhere, leading into a 3-day holiday weekend, and that would be this weekend coming, Memorial Day here in the United States. The week leading into that 3-day weekend, the market goes down instead of up. If you're in a market that's been going down, it goes up instead of down. That's called holiday reversals. We have unequivocal proof in the charts to show you this evening. What else is on the board? The U.S. indices are bouncing off the 200-bar moving average just on time for the holiday reversal. It makes perfect sense. I would not fall in love with this little rally that we're seeing because we know the intermediate term is the seasonal tendency to drop lower. So again, 3 views. Long-term bull market experiencing a pullback. Intermediate term, we are in a seasonal downtrend. And then for short term, we are looking for the reversal of that seasonal downtrend. Short term, we're looking for a couple of days higher. I would not expect too much on the upside, a couple of days higher. And then remember, we are in the seasonal and we should pull back, but we will take this one day at a time. Traders, how can I show all of this to you? We are in a bull market experiencing a pullback. I can show you that. Holiday reversals are absolutely abound. And remember the seasonal tendency to drop. What else is on the charts? The market is bouncing off the 200-bar moving average. Traders, everything on the board behind me, I'm about to show you right now. With no further ado, let's go look at some charts.
Traders, Oscar Carboni is holding another OMNI Camp live in Las Vegas. OMNI Camp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
Okay, traders, I know we have a long-term view that'd be bullish overall, right? Experiencing a pullback. And we have our intermediate term view, which is the seasonal tendency to drop during the month of May through August. However, we are looking at what should be happening for tomorrow. That's most important, the short-term view, the holiday reversals. Traders, the Dow Jones Transportation Average daily bar chart in a really, really big parallel channel for quite some time. It breaks down out of that channel when? Right in the beginning of May, starts to break down, gets to the 200 bar moving average, and now we have the holiday reversal starting to take hold. And here we are, bouncing off the average, looking like it might want to go up again for another day or two, but I would not expect too much more than simply a couple of days of holiday reversal before heading right back down towards the 200 bar moving average. That is the Dow Jones Transportation Average, the one that we recognized raced down towards the average first into the end of last week. Then we have the Russell 2000. This was the other chart that I showed you, which ran right down to the 200 bar moving average before the other markets even started getting close. I showed you it had a huge left shoulder, a huge head, a huge right shoulder. Then we went up for a head test, which failed. That turned into a bear flag, which worked. And then we have a parallel channel. So now that we're down in the parallel channel, the head and shoulders worked, the bear flag worked down into the parallel channel, bouncing off of the 200 bar moving average just on time for a holiday reversal. I don't expect too much more, a little bit above this line and right back down before this week is over or the beginning of next week is what's forecasted. Again, we will take this one day at a time, and for trading tomorrow, we have the up arrow in the Russell. Let's look at another chart here. Traders, it gets better. Dow Jones Industrial Average has the left shoulder, head, right shoulder, the bearish formation. It does break down into a parallel channel, gets close to the 200 bar moving average, and then starts to rally right in time for the holiday reversal. If the Dow opens tomorrow and stays above this parallel channel, it could use it for a springboard for a couple of days higher. So very nice holiday reversal. Looks like it is taking place. Bouncing once it got near the 200 bar moving average, just like its leaders did. Then you have the E-mini S&P. Basically the same sort of thing, traders. You had the bear flag or pennant. That was broken. Goes down into a parallel channel. Gets near the 200 bar moving average, but it stops cold when the holiday reversal begins. Look at this reversal bar on Monday. If it opens up Tuesday tonight and hits this and rallies, that will be a springboard for a couple of days higher before the likely event of a turnaround. So for trading on Tuesday, we are expecting, at least at the onset of trading, the E-mini S&P to start off on the upside. What's next? NASDAQ, same thing, traders. The flag, it worked well into the parallel channel, and I'll say the same thing. If NASDAQ holds the channel right here on Tuesday, it can rally out for a couple of days. Look at the 200 bar moving average. I'm sure we're coming to visit it at some point. Let's move along. Here we are. 30-year bonds. Look at this crazy holiday reversal start almost immediately. Traders, Monday, boom. First thing it does is go down. It's been going up for a while, gets right to the top of the channel, has a neutral day on Friday, Monday, right down. The holiday reversal begins in bonds. What's next? Euro. Going down, 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 hits the top of a parallel channel, which in every other occasion would go right back down. On this occasion, instead of hitting it, the holiday reversal begins and it ends up popping out of the channel. Holiday reversal setting in the euro. Look, even the DAX is not immune to the holiday reversal. Traders down, down, down we go after a wonderful bear flag. Failed miserably right here at the average. Creates the bear flag. Goes down from the bear flag into a parallel channel. What happens? Boom, on Monday pops out of the channel. Perfect timing for the holiday reversal. Remember the DAX, even though they're not having Memorial Day, it absolutely follows the emini S&P and the U.S. stock market. If the U.S. stock market is having a reversal bounce for a holiday, I assure you the DAX will likely try to take the very same ride. Now, traders, the long-term view we want to take a look at. The dollar index has been a big picture, a big piece of that long-term view. It has been moving up, but once again, the holiday reversal sets in, but boom, after all these up days right to the top of the channel, and then the holiday reversal sets in. The dollar has been giving us the fuel that we've needed for the market to go higher. The whole time the dollar went lower. Now the dollar started to go a little higher, pushing the E-mini down. But let's look at our slightly longer term view here, traders. The E-mini S&P, this is the weekly bar chart. Remember this, we are in an overall bull market and staying inside the confines of that bull market. You put a parallel channel right here, you are doing fine right now. We're in the bull market. So we know overall it's a bull market experiencing a pullback. Then we have our intermediate term view. Intermediate term, look what happens when May begins every year practically. Look at the down move, May begins. Here you had neutral, it didn't go up or down. May begins, big down move, May begins, big down move, May begins. 2012, the down move starts almost immediately. So intermediate term, we are bearish for the May through August pullback, which is what we see a lot of. Then short-term traders, do not forget the short term is that we're bouncing off the 200 bar moving average and the transportation average, and that is basically due to the holiday reversals. So the three views, long-term we are bullish, intermediate term it is going down, thank you seasonal, short-term for tomorrow on Tuesday we want to see a little bit of upside. That's our story, traders, and we are sticking to it. Traders, so there it is, our technical view on why. Up close, short term, green Omni. Intermediate term, we know we're having a seasonal pullback. And long term, looking for 1540 to 1570 towards the end of the year. Because we're day traders, what we care about for Tuesday, May 22nd, is the green arrow and the possibility of the upside coming on Tuesday. It looks like we'll get it. There's been a lot of pullback days. You got to have a couple of turnaround days. The holiday reversals are abound, just as I showed you. And they do seem to have started early because this week, on Monday, right out of the chute, the reversal began. Usually that starts on Tuesday midday. Started Monday, right out of the chute. So let's deal with it and see what happens. Traders, my best advice I give you this week is only trade the first couple of days and run for the hills just like all the rest of the traders, except for probably the ones at JP Morgan. Something tells me none of them are going on vacation for this holiday. But for the rest of the traders out there, the mass exodus usually begins Tuesday, Wednesday. Any trader worth his own salt is heading out to the Jersey Shore. He's going to the Hamptons. He's going away. They're going to Virginia. They go to Kitty Hawk. They go all over the place to open up their summer vacation homes. That usually gives us very thin, choppy markets and the holiday reversals because we have the Memorial Day this weekend, giving us a 3-day holiday weekend. Hence, holiday reversals abound, just like I showed you on the charts. Traders, if you're in a market that has been going down for a while, this week it should spend some time going up and vice versa, because that's what holiday reversals are. Remember to keep your stops in. A stop is your best friend. Come on down to livewithoscar.com. Grab yourselves a free membership and come into my trading rooms where I can help you understand this analysis better. And if you'd like to study with me, in about 3 weeks, I'm holding a 4-day training session live here in Vegas called OMNI Camp. And I happen to have a ticket available. A ticket just turned up, and we will offer it back out. So if somebody would like to fill that seat at OMNI Camp, It is June 8th, 9th, 10th, and 11th, a Friday, Saturday, Sunday, Monday. Just come on down to livewithoscar.com. Click the OmniCamp banner, fill out your application, and I'll qualify you for that seat. Traders, always remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Holiday reversals abound.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.